Welcome folks, how are you all? I believe that everyone is cool. So in this video, I would love to tell you about the one rules which is actually missing from your trading or your analysis. If you do the back test, I believe that you will be a consistent profitable trader if you just add these rules in your trading journal. Over here, I'm gonna show you the London session from today. From 4th April 2024. In this London session, there was a setup. This setup keep happen every single day. If you just do the analysis the way I'm doing, I believe that you will be the profitable trader. I don't want to waste more time at my introduction. Let's go and start the video. Over here, this is the Nasdaq chart, and from the Nasdaq, I'm here in 15-minute chart. You see this two blue line? That is the London session, which has started around 2 a.m. New York local time, and it is closed at 5 a.m. New York local time. In this 15-minute chart, you have the clean buy side liquidity over there. If you just open your chart first you have to look the liquidity. Where is your liquidity? You can see this high and that high, they are relatively equal highs. I always go for the relatively equal highs or relatively equal lows as my buy side liquidity or my sell side liquidity. Below here, you are not seeing any sell side liquidity. So you see market actually came here, went higher. This is that exact London session. Now, what is that rules which is missing? From 15-minute chart, you are bullish, right? Because you have the buy side liquidity. You have to believe that market is going toward that buy side liquidity. Now, market is coming here. There is the part. Look at that bull run. From that bull run, you have to mark two fair value gap. Let me explain that. Look, from market has started to run from here until there. You have to look for the lowest fair value gap. This is called the last fair value gap. And here I'm gonna mark it as my last fair value gap. Over here, this is my entry fair value gap. So I'm gonna mark it as my entry fair value gap. This is from 15-minute chart, okay? So if you are thinking that market is going higher toward that buy side liquidity, all you have to do is you have to wait to price reach until that entry fair value gap or the last fair value gap. When market will come to that entry fair value gap, don't care about any other fair value gap above the entry fair value gap or the last fair value gap. Both of the fair value gap is important. When market will reach to that entry fair value gap, you will be in 1-minute chart, okay? So when you will be in your 1-minute chart, you will start to look for a setup. What is the setup? Market came here, then it will give you a perfect market structure sheet. All you need a perfect market structure sheet with a displacement, some fair value gap. This is all you need. The market has to be inside the session. Outside of the session, this setup is not important. This is very simple, guys. You are looking for a higher run. Market is going lower. How far it can reach? Either this entry fair value gap or that last fair value gap. Any of this fair value gap is going to hold the price and send it back toward your buy side liquidity. So you can see market came here for the first time to the entry fair value gap. Then it went higher. Was there any market structure shift? No, there is no market structure shift. If you have any confusion about the market structure shift, then you can watch the video. I'm gonna put the link to the description. Okay, so you will get the market structure shift video over there to the description. So when market went here, there was no market structure shift. Then market went lower one more time. Take the low. So this is the liquidity taken. Market has taken the liquidity. After taking the liquidity, all I need a market structure shift. Here I got the market structure shift above there. This is my valid market structure shift. So I got the market structure shift over there. This is a very nice displacement with the fair value gap. Here is the question again. Which fair value gap you are going to mark? There is a lot of fair value gap, right? 1, 2, 3, almost 3 fair value gaps. So where you should take your buy? Some of you maybe use the fib for maybe optimal trading or something. You don't need anything. All you have to do is to mark the same way to fair value gap, the way you have marked from 15-minute chart. First, mark the lowest fair value gap. Where is your lowest fair value gap? this is your lowest fair value gap. Mark it as a last fair value gap or the breakaway gap. And the entry fair value gap over here. Just above the last fair value gap, there will be your entry fair value gap. So that is the entry fair value gap. Now, here is one more rule, and that is called, I call it immediate reaction. What does it mean? That means after getting the market structure shift, you have to wait 3 candles. Within 3 candles, if market can reach at least to that entry fair value gap, you are going to push your button. That means you are going to take your entry to that fair value gap. Okay, so when it will tap to the high of that fair value gap, you are going to take your entry, and you can put your stop loss just below the breakaway gap or the last fair value gap. If market takes more than 3 candles over here to reach that entry fair value gap, don't push your button. If you don't push your button, trust me, in a longer term you will be profitable. Now there is the part where will be your target. Now you are not going to target this buy side liquidity from 15 minutes because this is the extreme buy side liquidity. You can see later market has taken that liquidity over here. See, it has taken that liquidity later. I don't need to hold my trade until there. All I need to do is looking for some kind of relatively equal highs from 1 minute chart. So you can see this is the relatively equal highs from 1 minute chart over there. So what you can do, you can put your stop loss, target profit over there. So that will be your target, a very quick scalp. This is the only thing you are missing. You don't know from where you should look for your target and when you should look for, not target, when you should look for your setup. So all you have to do, you have to start from your 15 minute chart. If the fair value gap is not clear from your 15 minute chart, then you will look for the fair value gap from hourly chart. As the fair value gap from 15 minute chart is so clean, look at this run, very clean. All you have to do is market went higher, no problem. You have this clean buy side liquidity from 15 minute chart, no problem. You have all over there. All you have to do is to wait until market reach to that entry fair value gap or the last fair value gap. If you don't get your setup from entry fair value gap, then you will wait until market reach to the last fair value gap. If it can reach to that last fair value gap, after that, if it gives you the market structure shift with a fair value gap and a very nice displacement, go for that trade. And don't hold your trade for the extreme liquidity. Just go either for the 1 minute relatively equal highs or 15 minute last fair value gap as your target. Okay, so you can see there is your 15 minute last fair value gap over here. So that can be your target as well. When market will come to that entry fair value gap, you have to go back to your 1 minute chart. When you will be in your 1 minute chart, all you have to wait for a very nice market structure shift. If you get that market structure shift like over here, just look at this displacement, 1 2 3 4 5 6 bull candle. What a nice displacement. You got your market structure shift, perfect, no problem. Now mark the last fair value gap and the entry fair value gap again, the way you marked it from 15 minute chart. Now do it from 1 minute chart again. Okay, after getting the market structure shift, start to count the candle, how many candles it's taking to reach to that entry fair value gap. If it can reach that entry fair value gap within 3 candles, take that entry. Mark either the 1 minute relatively equal highs or 15 minute last fair value gap. Any of this target is valid. The best option is 1 minute last, relatively equal highs. But if you would love to mark 15 minute last fair value gap low, you can go for that, and you can see market actually came here and take your target profit. It works every single time, man. Every single time. If you ask me to show me another, another example, I can show it to you. So that was the London session. Now I would love to go to the New York M session. Okay. So over here you can see this is the. Let me mark the M session first over here. So M session start around 9:30. So I'm gonna mark it from here. So that is around 9:30, and the AM session is complete around 12. Okay. Now market has taken this relatively equal highs. What should you do? Should you go for sell? Is there any sell set? Any sell side over there? No, there is no sell side liquidity. Now don't get panicked by that run. That was absolutely abnormal. You can see what a run that was. This is only because of NFP. So don't get panicked by that run. The way I explained this entry, I'm going to explain the same entry over here again. Okay. So over here, this buy sell liquidity has taken. Don't get panicked. Over here, look over here. You have relatively equal highs over there as well. Okay. So here, if you mark that as your buy sell liquidity, nothing is wrong with that. It's perfectly okay, because market should go toward that buy sell liquidity. Okay. Now, when you are around the AM session, you saw market should go over there, but market is falling. Are you getting panic? No, you should not get the panic. Why? Because you know how far it can go, right? So let's mark the entry fair value gap. So there is your entry fair value gap over there. The same logic I showed you right now. This is the entry fair value gap, and over here this is your last fair value gap. Okay, I'm gonna mark it, and then I'm going to 1 minute chart again. So this is your last fair value gap. Remember these two fair value gap. This is your last fair value. Let's go to 1 minute chart. So over here in 1 minute chart, when price came to that entry fair value gap, what you have to do over here, you have to look for a market structure shift. Okay, you have to just look for a market structure shift. Do you get any market structure shift? Okay, this market structure shift was valid, but there was no fair value gap, and this is not even a displacement. So I'm gonna ignore it because this is not a perfect setup. There is no fair value gap, so this market structure shift is not valid. Then market went lower, no market structure shift. Finally, market reached to that last fair value gap. So when market reached to that last fair value gap, I don't need to keep that entry fair value gap on my chart. I'm gonna remove it from my chart. So when market came here, I am still looking for a market structure shift. Look, do I get any market structure shift? No. Finally, market came here and it gave me the market structure shift over there. So here, this is the market structure shift around that area. So I got the market structure shift over there. Now, if you don't want to mark that one, this is also a market structure shift here. Exactly same option. Okay, over here, this is the exact same market structure shift. When I got the market structure shift, this is my fair value gap over here. Now here I got one fair value gap, so I don't need two fair value gap. I got one fair value gap. I'm okay with that. This is called 22 perfect YT model. Market didn't reach over here, so you are not able to take that entry. The reason is market didn't trade that fair value gap. Here you didn't get the market structure shift. If you mark that high, over here market just failed to give you the market structure shift over there. So you failed to take that entry. If market could give you the market structure shift by that run, just little two handle above, then that could be your entry over there. That could be your entry. Whatever, that was my entry, and I showed that entry in live that market is going to work, and market actually went higher. So far I don't need to go so far. As I have seen, there was the relatively equal highs. That was my target. So that was my entry around there. I took the close approximately entry. My stop loss was over there, and that was my target. Okay, that was a very nice setup. This setup was very clean in E-mini S&P. I have shown that as well. So if you come to E-mini S&P, and over here there was the same area. Okay, when market came here, first what it has done, it went lower, take the liquidity, gave me the market structure shift. So over here, that was the market structure shift, the same area. Okay, just go to your chart and look it on your chart. That was a market structure shift. This was the fair value gap over here. So that was the fair value gap. Let me mark it. And the immediate reaction. How many candles it takes to reach to that fair value gap? 1, 2. When market came to that entry fair value gap, you will just take your entry over there. Where will be your stop loss? Just below that low or that low, wherever you want to put it. And where should be your target profit? As you see, there is kind of not so many information. You can go for the 5 handle. Actually, I got something around there. Oh, okay, sorry. I got the liquidity here actually. So I marked that relatively equal highs around that area. And that area, just let me mark it, and you will see it. It went actually far away. So over there, that was the entry. Okay, or the same logic from the 15-minute chart. All you have to do, where is it actually? Over here. All you have to do, you have to wait to market reach either the 15-minute entry fair value gap or the last fair value gap. If you have only one fair value gap, you will just go for that one fair value gap. If you have one fair value gap, if you have two fair value gap, then either you have to go entry fair value gap or the last fair value gap. If you have more than two fair value gap, same thing, entry fair value gap and the last fair value gap. Price came here to that only fair value gap. Then 1 minute chart, you have to go to your 1 minute chart. You have to wait for the market structure shift. This was the first time when you got the market structure shift. Why that market structure shift is valid? For that, you have to watch that video. I'm gonna put the link on the description. So over there, that was the setup, and over here, it missed that high for little pips. Okay, one or two handle, maybe actually one handle. It missed that market structure shift for one handle. That is why that entry, I didn't took entry from there. Instead of that, I took that close approximately entry. Okay, that is called the close approximately entry. So that was the market structure shift exactly with this high and that high. Any high you will mark, you will get that from there. Over here, if you mark that thing as your market structure shift, then this is your entry fair value gap. There will be your last fair value gap. There is no other fair value gap. Okay, so this is the lowest fair value gap, which is called the last fair value gap, and this is the entry fair value gap. Market failed to reach over there. If you would love to take that entry, that's close approximately entry, my advice is just avoid that one. But if you keep seeing this, this is not going to happen every single time. You are going to get the market structure shift. Trust me, man. You are going to get that market structure shift, and that will be your entry. So that is the only thing is missing from your trading analysis. If you just add that 15-minute fair value gap from your chart, and if you start to observe the price like that way, when market came to that 15-minute either entry fair value gap or the last fair value gap, you will go to your 1 minute chart. You will look for the setup. Again over here, 15-minute entry fair value gap, last fair value gap, price come here, then it will give you the setup. You will go for the run. Okay, if you do that like this way, I can show you thousands of the example over here. If you would love to see this example, I can show it to you as well. Just go to your chart and see. This is the entry fair value gap, this is the last fair value gap. Price came here to that last fair value gap. There was the setup. So there was a perfect setup inside the session, PM session. Then here there was a perfect setup from the from there. Okay, there was also a perfect setup from this fair value gap. I'm showing this all of this setup in my life, not hindsight. Everything I have done already. So this is the only thing which is missing from your trading. Just learn this or add this to your analysis. Trust me, man, you are going to be the profitable. No one is going to stop you from being profitable. I hope this is going to be little insightful. If you like it, then don't forget to give me a like. And if you're new, you are welcome to subscribe to my channel. So see you guys, or until the next video. Cheers.